It's a macro story. You're a macro guy. Galaxy Digital CEO Mike Novogratz joins us in an exclusive interview. Mike, what do you think's going on here?
Listen, this reminds me a lot of 2018 December when the Fed had this idea of one last hike. And of course, it sent the markets into a tailspin. They had to reverse it soon after. In a short period of time, information has changed dramatically. The commodity market is telling you, oil market is telling you that we're heading into a recession. We are going to have a credit crunch in the U.S. and globally. And so fixed income, commodities all tell you we're heading into a recession. Powell should pause, and we'll be cutting rates sooner than we think. And so that's a huge shift in psychology. It's got Bitcoin and Ethereum on the move. If there was ever a time to be in Bitcoin and crypto, this is why it was created, in that governments print too much money whenever the pain gets too great. And we're seeing that.
I get that to some degree. I also think that basically the bailouts by the United States helped stabilize things like the stable coin, which was pegged to the dollar, as you know, and you saw where crypto had fallen as a function of all of that. But I think the larger question right now is, are we in a, I don't want to call it a game because it's not a game, but is this dominoes? Do you see the possibility of contagion in our banking system? Do you think it's limited to what's happened in Europe? Do you think what happened with SVB is enough?
Listen, there is contagion. People learn their lessons, and so we're going to move towards 4 or 5 big depository institutions unless the Fed goes one step further and de facto. I mean, they kind of did guarantee deposits ish, but they really didn't. And even the thought of, oh my God, my money could be tied up for a week, or my money could, like, why am I taking any risk? Like, that story is out there. It's hard to put it back in the box. And, maybe yesterday it felt like, well, maybe it'll get back in the box and another guy hits. And so I think that the Congress and the Fed is going to have to do something more dramatic on deposits, or we're going to see a constant pressure on these regional banks in the whole system, right? And so now you've got a market that's going to go into a credit crunch. How do banks rebuild capital? They lend less. And so you're going to see a credit crunch happening in the United States, and that's starting to get priced in the market in a dramatic way.
So, Mike, you're a macro guy. So putting that hat on, what do you look to in this environment? If you are a believer that there's a looming credit crunch globally, then what are the trades off of that?
I think you want to be long gold and silver. You want to have yield curve steepeners on. Now, 230s has steepened 100 basis points in 5 days. And so it's going to be really volatile. But if you go back and look, when that chart turns, it turns for long periods of time. And so you want to be in yield curve steepeners, so you long gold, and you want to be long Bitcoin. Like, Bitcoin was built for this environment.
So those are, that's sort of bunker trades.
Listen, we're at a shift of Fed. Listen, stocks will be interesting. They probably go down first and then, bounce because the Fed's shifting policy. And Powell's got a really tough job. He was just 2 weeks ago, talking about, I got to raise rates to 6% or higher. And now they're going to be like, oops. Listen, there's an old adage, the Fed hikes rates until something breaks. Last Friday, something broke. And now we're seeing lots of things break. And so at a bare minimum, they're going to pause. I think they'd like to do a dovish hike just for credibility's sake. That would be a huge policy error.